All right. So we just finished up with a just stunningly interesting interview about gold. Some real nuggets were uncovered there. See what I did there, Ben? That's my mining joke. Why don't we just do a quick recap about who we interviewed and kind of a brief summary there, Ben?
Yeah, for sure. So we just interviewed Maria Smirnova. She is the lead portfolio manager for the 9-point precious metals and silver funds. Actually is a portfolio manager for Sprott Asset Management, but they sub-advise. So yeah, Maria took us through a great analysis of the gold markets, how they think about it, with all the central bank printing going on. There is lots of talk about the devaluation of your money. Your money's worth less and less every year. And she made, I thought, a really great argument around why gold is an appropriate allocation within portfolios. And so that's what I think, that's what I took away from that conversation.
Great. All right. Yeah. Well, without further ado, here's the interview with Maria Smirnova from Sprott. All right, we're live. Welcome to Think Hart. I'm Scott Goodfellow. This is Ben Hart. We're the Hart Investment Group with National Bank Financial. Today we're very excited. Well, Ben especially, I've been hearing for, years, all this time about gold. He really wanted to find a gold expert to bring on the show. Well, I think we have that person today. Ben, why don't I kick it over to you and you can do the intro?
Yeah, sounds great. Excited to have Maria on to talk to us about gold and her views. And I'm certainly interested to learn more about Maria and how she got into the business and where we are today. But, my macro backdrop, as we know, for the last multiple months, I've said, I think we're heading into an environment which I believe that inflation's running a little bit hotter than expected and GDP is starting to slow. Historically, that's been a really good setup for gold. So, I think this is a really topical and timely opportunity to hear more about it. Maria, I'm excited to have you on. Thanks very much for coming tonight. Maybe you can tell our guests and viewers a little bit about who you are, where you work, and certainly I'd like to also know why you got into the business.
Great. Well, thanks guys for having me on the show. Really appreciate it. I got into the business, like most people, I think, not by plan or design. It just happened over time. I went to business school at U of T, graduated, kind of got interested in mutual funds, started working at a couple of mutual fund companies. I worked at Fidelity for a couple of years, did my MBA after. And at Fidelity, I really realized that I wanted to be a portfolio manager one day. And that's why I went to MBA school. And once I graduated, that's when I, really started looking for that kind of opportunity. And frankly, not many people in my class were looking for that kind of opportunity. So it was pretty unique in terms of what I wanted to do. And of course, I was very fortunate to land at Sprott. Eric Sprott actually hired me as an associate analyst at the time, looking at base metals. So I landed not knowing anything about metals, not knowing anything about mining. And Eric was so gracious and spent so much time with me teaching me about the space and how he looks at things and analyzes companies. And, that's my training. And of course, over time, I started looking at precious metals as well. Then later on starts focusing more and more on silver. I learned from John Embry. I learned from Charles Oliver. I've been really fortunate in my career to learn from the gentlemen who were leaders in the space. So, I kind of have looked at many different ways to analyze. And I look at mostly at mining stocks, right? So gold is one part of it. But mining stocks is what I do every day. That's my bread and butter. So, Eric was an accountant. I'm a finance person. And I'm all about numbers, really, at the end of the day.
Okay, awesome. That's, I don't think you could have learned from many better in the space. I mean, Eric has been one of the most prominent thought leaders in precious metals for decades. So that's amazing. That must have been a great experience.
Amazing. Like I said, I'm
Yeah,
very fortunate.
yeah, yeah. So now today you manage a couple of different funds. Maybe you can mention a couple of those, and then I'll have some additional questions on top of that.
So my employer technically is Sprott Asset Management, sorry,
Yep, yep,
which is an arm of Sprott Inc., a publicly
hmm
traded company.
yep,
And we are currently sub-advisors for 9 Point Partners. Um, these guys distribute a few of the funds, like you mentioned.
hmm
One of them is the 9 Point Gold and Precious Minerals Fund, and the
hmm
other one is Silver Equities Class, or 9 Point Silver Equities Class. So these, by you can hear from the name of them, one is more focused on gold, the other one is
yep,
more focused on silver.
yep. So maybe you can tell me a little bit about how you approach, I guess the macro, because I know we talked a little bit in our email exchange, and you do look at it from a macro perspective. So maybe you can tell me a little bit about where you think we are, what that looks like, and then we can dive into portfolio construction, individual companies, and analysis and things like that.
Well, macro is such a great, big subject, right? Like, where do you begin?
Sure.
I think to summarize what my thesis has been on gold and silver is we live in a world of slowing economic growth. And a lot of that has to do with demographics. As you know, baby
Mm,
boomers have been getting older, unfortunately, retiring. We have more and more retired people. That
yep.
increases entitlements, which means, in essence, governments have to pay out more and more money,
Yep.
which generates more and more deficits. So,
Mhm.
if you look at the United States, for example, the US is in a twin deficit, the budget deficit and trade deficit. So that type of environment, throw a crisis or two on top of that, like the global financial crisis
Mhm.
and then the COVID crisis, and that
Yep.
just exacerbates everything. And so we've been living for a couple of decades now in a world of QE and
Yep.
low and declining interest rates.
Yep.
And, that's been really positive for gold, frankly. So when
Yep.
we talk about gold and silver, we talk about these metals as a diversifier in portfolios. We don't by any means advocate having 100% in them
Yeah.
of a portfolio, but
Sure.
as a 5 to 10% portfolio diversifier, that's where these metals come in.
Yeah. Yeah, so I think when I came into coming out of 2007, 2008, I thought gold would have been, if you were to ask me then where gold is today, I would have thought it was a much higher level than it is today. Any thoughts and context around why it's kind of been, it's kind of been stuck, I guess, so to speak. If I told you that the deficits were where they are, the trillions of dollars of debt that all the countries have, you'd probably say gold would be at 8,000. So where do you think the pressure point is on that?
Actually, that's a great question. I mean, I guess uh, cryptos have taken a little bit of shine out of gold, right? More
Hmm.
money has gone into other asset classes, so cryptocurrencies being one,
Hmm.
even other real assets. If you look at
Sure.
housing prices, they have been going up. The
Yep.
stock market, the general stock market, has been doing really well.
Yep.
So all of these things have taken funds away from gold. However, I would also say that, on a fundamental slash physical basis,
Yep.
we're still seeing inflows into ETFs, and that's
Yep.
physical buying.
Hmm.
We also sub-advise a couple of gold and silver bullion funds for 9 Point. We're seeing physical inflows. People want the physical metal.
Sure.
So I think that the paper price, quote unquote, versus the physical market are two different things.
Yep.
And I would say that the interest in the metals themselves has been there.
Yep.
And the price is a matter of time. In fact, I just read before I got online with you guys that given the situation we're in, somebody did the analysis and gold is actually undervalued by close to $100 given the variables that we're seeing today. Now,
Sure.
I think over time, and I think today, specifically today, One of the reasons that gold is not higher is because people are expecting Fed to taper and increase interest rates. Whether that happens or not, we can debate, but the metal prices have come off because of those expectations.
Sure, sure. So when you talk about the physical and the paper, maybe you can elaborate on I know you and I know what that means. Maybe you can elaborate on what that means a little bit for people, and also what the differential would be potentially between those two prices.
Well, certainly. I mean, there's multiple ways to invest in gold and silver. You could literally buy a gold or silver bar or coin and put it in a vault or under your pillow. Or you could buy an ETF, which is backed by physical, or a lot of institutions do this. You can buy futures on the COMEX, right? So that's an exchange where these things are traded. And so you never actually exchange physical bars. You just kind of trade paper,
Sure.
You can close out your position just in dollars, right?
Right.
So these are very distinct markets, and when you're buying physical, you generally pay a premium to the spot price, whereas on the COMEX you do not. You pay what's called the spot price, right?
Yep. Yep.
So very different.
Yeah. So we had obviously in the last few days here, we've had some volatility in gold, some on the employment numbers, but also over the weekend where we saw a big market order come into the futures market. Any context around that? Who that might have been? Why? Like, that was a strange kind of situation. Any thoughts around that?
Well, I have no idea who it was, obviously, but
Sure.
I would say that the timing of it, I think, was interesting. It was done at a point in time when there was very little liquidity. So it begs the question of why somebody would choose that particular point in time to do that, right?
Yeah.
And I'm not, I'm not going to speculate as to who or why,
Yeah. Yeah. But it's an institutional trade, right? In the market, it's not an individual trading it.
Sure, yes.
Yeah,
Absolutely.
yeah. And it was a 6% gap down. Was that approximately what it was?
$100, I think. Yeah.
$100. Okay.
People were calling it a fat finger.
Exactly. No, it's I've had lots of conversations with clients over the years about gold, and I think there's still kind of a misunderstanding, and there is I think a big difference between that paper and the physical that people often talk about. So part of the reason why, like the central fund as an example, they own the physical, but if you trade some of the ETFs, all these ETFs don't actually own the underlying gold. Is that correct?
I mean, some of the ETFs say that they do own it, but the speculation is that they actually don't use allocated gold and silver. And that's a very important point. For us, we pride ourselves on the fact that, we publish bar lists. 9 will publish the list of bars that are in the vault. We do annual audits of the vaults to make sure that the gold and silver is actually there. And I think that's our reputation, right? Sprott has that reputation that we stand behind these products.
Yeah, for sure. I think that's a reasonable summary on, I guess, gold and how it looks and how it works a little bit. So I'd say maybe you can talk to me a little bit about portfolio construction, how you think about it, what, where, why, what are the inputs, and then we can dive into a few more questions.
It's a very good question, actually, and I think we differ from some of our competitors in the sense that we are small to mid-cap specialists. We always have been, from Eric to John to Charles. We don't generally buy the larger names. We look for exploration stories. Right now, I'm very excited about certain exploration stories. Why is that? Well, because in exploration, that's where you can create a lot of value, right? By finding the ounces, by drilling in the ground and finding the ounces. That's how you make money in mining, right?
Sure.
And then the other way is, of course, to buy producers. But again, we focus on small to mid-cap producers that have a re-rating potential ahead of them.
Mm-hmm.
So our portfolios are constructed in that way. We'll have 20 to 30% exploration companies and the rest in these kind of smaller producers. And I don't want to go into many more details than that
That's
on
fine. Yeah, yeah.
portfolio construction.
Yeah, yeah.
But in terms of what do we look at? Well,
Yep.
in mining, you have to look at everything from management. There's no strategy in mining, right? You can't change geology. So it's basically locations like real estate, location, 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 right?
Yeah.
And so once you determine your location, you look at geology. And to me, the most important thing is always drill results, right? Again, I'm a
Okay.
numbers person, I'm a math person.
Yeah.
I look at drill results, I try to think in 3D.
Yep.
And on the producer side, it's the financial statements and figuring out what the profitability will be down the road next
Yep.
year, in 2 years, in 10 years, right?
Yeah.
So we kind of look at a
Yeah.
lot of different things, and it's difficult to summarize.
No, that's a good summary. I guess I would think about it too. So, as the world's become more financialized, information flow, there's not really an edge with big cap companies in general. So, as you say, tilt kind of small, mid, and explorers. Is there still significant advantage to boots on the ground, like going in, meeting the team, seeing the mines? Is that still what you do?
Absolutely, yes, we do.
Yeah,
We
okay.
do, and we have a team internally. Obviously, there's 5 or 6 of us
Yeah.
um, who do that, and we have geos on the team. Like, it's not just me
Yes.
doing
Yes.
this. But
Yeah.
unfortunately, COVID has put a damper on mine site visits, as you can imagine.
Sure. Yeah.
But we're hoping, to start again. And for me specifically, I've gone to Latin America a lot.
Hmm.
We go to Australia. We do go and
Hmm.
meet as many people as we can, for sure.
Yeah. Yeah. So you mentioned a couple of countries there. So jurisdiction comes into thinking about the investments as well, I guess. Canada obviously is a hotbed for companies, for listing companies, anyways. But jurisdiction plays a big part too in the analysis.
Absolutely, yeah.
Okay.
It's not just having to do with political risk, though.
Hmm.
Like I said, certain areas, you can't change geology. So, for example, in
Yeah.
Silverland, where do you go? You go Mexico, you go Peru, you go Latin America, right? That's where we
Yeah.
find the silver mines.
Yeah.
There's silver mines in U.S. and Canada as well, but not as many.
Sure.
In gold, lots of African mines, lots of
Yeah.
Australia. Australia is huge
Yeah.
in gold mining, right? It's very similar to Canada.
Yeah.
So, but then we, of course, we layer, you asked about portfolio construction, we layer the political risk, and we make sure we don't overweigh the quote unquote riskier countries. And there's some countries we won't touch either. So,
Yeah. Yeah. Makes sense. So as we've watched, gold had a pretty good run from the start of last year, and maybe even I'd say 30 months ago, and then has kind of stalled in the last 6 months. Well, the one thing that I've kind of seen, which I know you have as well, I'm sure, is that it looks like there's some hesitation from the bigger companies, right? Typically, when you get into a bullish cycle, you get the bigger companies buying, going down, buying mid caps, buying smalls, and then explorers. Seems like the miners have been really hesitant to do that. Is that the case?
yes and no. I think pre-COVID again, we
Yeah.
were starting to see a lot of activity. We saw some big mergers, first of all,
Yeah.
creating super companies,
Sure. Yeah.
Randgold and Barrick, the new
Yeah.
Barrick, right? Then the JV with Newmont. Like there were some big deals in Australia. There was some deals, and then
Deals.
kind of
Yeah.
everything stopped, right?
Right. Yeah.
So then we've seen a few deals since then, but as you mentioned, not nearly. It's not happening. It seems like, and I think a lot of it has to do with doing due diligence, and people
I
haven't been
see.
able to travel as much as normally they would. So I
Okay.
think it's a pause. It will continue happening. The large companies are struggling keeping up production. They're
Hmm.
trying to maintain production and not even grow it, which tells us, they will need projects. They will need companies to fill the pipeline for sure.
Right, right. That's interesting. Yeah, no, that's a fair point, and I guess that's where some of the opportunities may lie, in that potential space.
Yeah, and that's
Yeah.
one of our consideration, but we certainly
Mm,
never buy a stock thinking that
mhm.
it will be bought out.
Yeah. So since you like the numbers, I think as I mentioned before, valuations, it mining companies probably have the best valuations versus any other asset class in the world right now. Is that how you'd be thinking about things too?
Yeah, I mean, I could show you several charts that would argue that point for sure. If you look
Yeah.
at the S&P 500, mining companies, or specifically precious metals mining companies, are trading at half the valuation of the S&P 500. Um, and I have another chart showing how, in fact, expensive the S&P 500 or the general market is relative to GDP. It's the Buffett
Yeah.
indicator is indicating it's an all-time high.
Off the
And the
charts.
miners are nowhere to be found. Yet the miners are essentially printing money right now.
Yes.
At the current gold price, these guys are
Yeah.
making good free cash flow. And,
Yeah.
so it kind of boggles our minds why that's the case.
Yeah. Yes, that's a fair point. I mean, the market's really changed over the last decade from who and inputs and who trades it. So maybe tell me, since I know you're working institutional land a bit as well, what are the institutions doing? Are they staying with a static allocation? I know typically some of the institutions would have gold as a currency within their asset mix. Would they be buying miners? Would you see fund flows that way? What would the institutions be doing?
So in terms of our flows, we only see flows really from, through the advisory channel
Mm,
from retail investors.
yeah,
And I have not heard a lot of institutional investors putting money into the gold miners. I mean, we
interesting.
hear about it. I think right now, you could say that they're looking at the space,
Sure.
but I'm not sure how much they're actually buying right now.
Yeah, interesting. Yeah, I mean, that maybe makes the point as a lot of institutional monies looked at crypto as an alternative asset within portfolios. So, I think that as I've thought about it a little bit, it looks like the fund flows have been light and the momentum, gold tends to trade on momentum a bit as well. Seems like the momentum hasn't moved in this direction. What do you think might see us tip in that direction? Like an economic event, a market event? What do you think might kind of tip the direction?
Either or, as we saw, and you mentioned this last year, things
Hmm,
were flying. There was a lot of interest in the space.
for sure.
Well, we had a big crisis last year, right? Can we expect, and do we want a crisis every year? Absolutely not. So I think we don't really focus on the shorter term. I think if you
Right.
look over the last 2 decades, over 2 decades, gold has done really well. If you
Yeah.
compare it to any other asset class, gold has done well.
Yeah.
So I think our longer term thesis is the same for
Yeah.
as long as the Fed and other central banks are printing money at the rates they're going. I
Yeah.
think, our confidence is in gold and silver is pretty strong. And
Hmm.
silver, of course, has its own fundamentals on top of the gold fundamentals. So, again, for me, it's a longer term game. It's not a 1 month or 2 month thing.
Yeah. So that's great. You brought up a couple of great points there. So when you're buying a company, you're investing in a space, are you thinking 3, 5 years, 5, 10 years, or it depends?
It depends, but in generally speaking, mining is a longer term game, right?
Yeah. Yeah.
As you can imagine, it takes time to find the gold or silver. It takes time to develop that deposit. It takes time to define how you will extract it.
Yeah.
It's
Yeah.
a permitting is a huge issue nowadays, right? So it's like 10-year process.
Okay.
Um, so it depends. I think in terms of exploration, it's
Mm.
at least a couple of years, right, to create that value, two to
Yeah.
five years, I would say. And
Yeah.
then on the production side, we would never buy something with a 1 year view. Again, we want to have a view that this mine will be there for years and
Yeah.
that there's exploration upside to continue that mine
Mm.
and or grow the production. So we have to
Yeah.
see upside in several ways to
Yeah.
invest.
Got it. Got it. So you referenced silver there, as the world evolves and we go more towards electric vehicles and technology and microchips and things like that. Do you think silver kind of closes the gap between gold right now because it's pretty wide still? Do you think that there's a gap that catches up there?
Well, I mean, we've gone from 120 to 1 gold to silver to 74-ish to 1 now. So we've closed a lot of that gap.
Yeah.
Averages over the last 4 decades, I believe, is 65 to 1, but it generally overshoots. So we are silver bulls, and we do
Yeah.
think it will continue outperforming gold.
Yeah.
And you brought up some very interesting themes of why we think that will be the case. If you look at last year, for example, demand for things fell off the cliff, right? The one area where demand did not suffer for silver was solar panels. Solar
Okay.
was stable, and in fact, it grew 2% last year, which tells me, if that happened last year, what's going to happen this year and going forward
Sure.
with infrastructure spending ramping up, with Biden talking about, electric vehicles, all of that. That just
Right.
benefits silver so much, for sure.
Yeah. Yeah, I mean, it really does. The U.S. economy still consumes a lot of coal, so if they're going to tilt their consumption, they're going to need to get it from somewhere. So that's interesting. So maybe on the geological side, I do often get clients that ask, where does gold, like, why do some of these gold producers also report silver residue, or like there's multiple, like what's the geology look like in a typical gold find?
Well, if you think about how deposits are formed, it's magma coming up from
Hmm.
within the earth, and
Hmm.
it brings with itself all kinds of wonderful things, right? So it doesn't just bring up gold, it doesn't
Yeah,
just bring up copper.
yeah,
Sometimes I call it a soup of metals. Sometimes you have 5, 6, 7 metals in one area, right? But there are
yeah,
definitely different types of deposits which tend to have their own chemistries and their own sets of metals, right?
yeah.
And so you kind of try to figure out what's what
Hmm.
and how to importantly deal with all these metals. How do you extract them? That's the fun part of it, right?
Yeah, right, right. So the one theme further on to away from precious metals, and I guess more related to copper, is electric vehicles consume so much copper. There hasn't been a lot of copper finds in the world in a very long time. Is there still potential for new finds? Is there still, like, do you follow that kind of base metal space as well?
I don't follow copper closely. However, yes,
Yeah,
I do understand that there's potentially a shortage of copper looming, right?
yeah,
And importantly, the deposits that we do find, they're lower grade than we used to find. So if you think back to the mines, the big mines in Chile specifically, big copper mines, they were much higher grade. What does that mean? There's
hmm,
just more metal per ton of ore in a specific deposit. So and that's happening, by the way, in gold and silver as well. The deposits we're finding somehow nowadays are
yeah,
lower grade than 100 years ago.
hmm,
Back 100 years ago, we were mining kilos of silver a ton, for example. Well, it's
right,
hard to find that nowadays, right? Similarly, with copper, we used to mine percents of copper, sorry, per ton,
yeah,
like
yeah.
whole percents, and now they're fractions of percents. So
Wow,
you see where I'm going with this? Like,
sure,
it's just harder to find rich deposits nowadays. I don't know. I'm not saying we've mined them all out. Maybe
yeah,
they're
yeah,
deeper.
yeah,
Maybe they're in inhospitable environments.
yeah,
But I do feel like we've kind of picked off a lot of the easy fruit already.
yeah. So these could be pretty material movers long term with this direction. Um, you know, I think what scares a lot of people away from anything metal related is the volatility with the space. So, how do you manage the volatility, or do you, or is it just part of the nature of the beast?
Yeah, I think we've had to learn to live with it.
Yeah,
Our job is to be invested.
yeah,
I think it's the job of the financial advisor, to make that allocation to
yeah,
cash or be invested. And
Yep.
so I think we leave those decisions to investors. And our job is to just find the best businesses we can. And I think that's how we look at it at the end of the day.
I think Ben froze there. All right, well, we'll just keep
I think
going.
I lost you guys for a minute.
I'll pick it up as best I can. I know a couple of the, I think you ended that point pretty well. So what about, it seems with the emergence, it's in the last year of cryptocurrency, is the gold space nervous about that new space, or is that something you're monitoring closely or not?
Ben's back, I think.
Ben's back, yeah.
Sorry. Yeah.
Okay.
We lost you.
Yeah.
So
sorry,
I took the opportunity to jump right into crypto.
Oh, did you? Okay, great. Go for it. Please answer that, and then I'll jump into what's next.
Well, I think we should start over, but in the meantime, Ben, your picture has been very blurry this whole time. So I'm not sure whether that's going to record like that.
It won't. There are individual recordings, so I can see like myself is clear.
Yeah.
So you guys look a little blurry to me.
And all the picture qualities will be 100% because it's individually recorded.
Individual.
So it's
Okay,
yeah. So
okay.
so it'll look different than what you see
repeat
now.
the question.
Yeah, I don't even really remember what I said. Yeah, well, Ben, why don't you pick it up and ask the crypto question? Let's get on.
Okay, so yeah, I mean, look, I as I follow big picture every kind of market, I certainly think and pay attention to all different asset classes. I think gold's an important asset class, but crypto, which we talked about briefly early on, seems like it has pulled a lot of attention away from. Potentially pulled it away from gold, but pulled it away from other things that are kind of high beta, like gold might be, gold miners, that is. So what do you think of those two? Like, do they coexist? Should they exist separately? Like, how would you think about it? And what do you think those kind of impacts are, I guess, specifically related to what you do?
Well, it really doesn't. Crypto doesn't really impact me per se as to what I do.
Yeah.
And I'm not a crypto expert by any means, but like you, I try to read as much as I can about it, and
Yeah.
I've really tried to understand the allure of cryptocurrencies.
Yeah.
But the last time that Bitcoin, for example, went to over $60,000,
Yeah.
I was trying to read as much as I could and figure out what is driving that, right? What is the reason that people are so excited about it?
Yeah.
And frankly, the thing I kept coming back to was that it was being promoted by certain very well-known individuals, right?
Sure.
Who said they were buying it for their portfolios, and that almost fueled that rally, right? Of course, after that, it crashed by 50%. But anyway, notwithstanding that, to me, that kind of told me that it's a speculative thing. That's my perspective.
Yeah.
I'm not saying I'm right. I'm just
Yeah.
saying that that's what is appearing to me because, the minute Elon Musk said, oh my God, Bitcoin is bad for the environment, what happens? It crashes.
Yeah.
Well, okay. So again, that's confirming to me that viewpoint of the price is being influenced by certain individuals who are talking it up and saying, hey, I bought some. Well, you have to, buy some as well.
Yeah.
So, that's a long-winded answer. I realize that, but
Yeah.
so to me, we'll see. I think the jury is out, and I read Ray Dalio a lot and follow what he does.
Yep.
And he's come out and said, hey, I own some, but I'll own more gold.
Yeah.
Because gold longer term has stood the test of time.
Yeah.
It's a real asset. It's a monetary asset. And, I'm with Ray, basically.
Yeah, I
Whatever
mean,
he
he's, yeah, it's hard to argue most successful hedge fund manager of all time. And all weather portfolios, one of the best portfolios of all time. Yeah, I mean, some of these guys have come out with interesting views, and I think that it's an interesting change to how prices have changed. And we've seen crypto, we've also seen the meme stocks, we've seen Robinhood, like we've seen a kind of evolution in equity markets. And so I whether you like it or not, which we could argue both sides of that, I think it's been interesting in the last 12 months how retail has had a pretty material impact on asset prices. Any thoughts around that?
Oh, no, absolutely. I agree.
Yeah,
I mean,
yeah,
these things are rallying again. They sold
yeah,
off and now they're rallying. And I
yeah,
don't even know what's driving this latest rally, right?
sure,
I
yeah.
think a lot of it is momentum and people
Hmm.
just jumping on the bandwagon, right? But
Yeah,
I absolutely agree.
yeah,
These things are getting a lot of attention,
yeah,
and it kind of feeds on itself.
yeah, for sure. Yeah, and we've seen, look, I think that gold does and can gain momentum like we saw last year as well. And so I think you may see, if you see flows kind of change, that's where things could potentially really get moving. So I think that really how I started the conversation is I think that the setup is good. Like we have that stagflation setup, inflation with slowing growth. That's historically been one of the best times to own gold in portfolios. Would you agree with that?
Yes, if you look back at the 70s, that was a stagflationary environment for sure.
Hmm.
I would say that what we are currently saying is gold has the biggest correlation to real interest rates, right?
Okay. Okay.
Specifically, the US 10-year real
Yep.
rate.
Yep.
And it's negative.
Yep.
And in periods of negative real rates, gold has done really well. That was the
Yep.
case in the 70s. That
Yep.
was the case in the 2000s.
Yep.
That's the case now,
Yeah.
recently, right?
Sure.
Where negative, be it because interest rates are low, nominal interest rates are low,
Yep.
be it if inflation is running away, you know, the
Yep.
real rate is minus one, over minus one right now. And
Yep.
depending how you measure it, it's more than minus one. So
Yeah.
again, we're hitting, I know you talk about, bonds as well. And
Of
the
course.
bond market has close to record amount of negatively yielding debt, right?
Sure. Yeah.
So in that environment, it benefits gold.
Yeah, that's fair. And just for people, it's simple. Like interest rates, you subtract inflation, gives you your nominal rates. And looked at the the German 10-year the other day. Nominal rates in Germany are minus 4.2%. So I think you're right. I expect rates to be pegged close to zero for the foreseeable future, and I don't think inflation stops anytime soon. It likely slows dramatically because of the year we had last year, but so that's a fair point. And so I guess that would be your longer term view as well. We continue to march towards this zero bound.
Well, I think you brought up an important point in the beginning of our conversation, and that is we are living in a world of slowing growth or slower growth.
Hmm.
So what's happened now? We've come out of a crisis and growth has been rocket high because you're starting with a lower base. But
Yeah,
let's remember that even in the second quarter in Q2,
yeah,
the US GDP growth disappointed by almost 2 percentage points, right?
yeah,
Expectations were for 8.4%, it came in at 6.5%.
yeah.
So, even these high expectations that people have had
Hmm.
have been letdowns, and the consensus is that economic growth will slow from here because again, you don't have the same base effects, right?
Yeah,
And even before that, I mentioned demographics.
yeah,
That's still the case. The population is still aging, and in fact, I've read that even in the United States, population growth has crashed again.
yeah, for
The,
sure.
the birth rates have come down to the point where population is almost not growing. So that's not really good longer term as well, because that will have implications longer term on
Yeah.
economic growth.
Yeah.
So we look at that a lot. I mean, and again, I mentioned entitlements. That
Yeah.
will drive the deficits. That will drive, and if we have infrastructure spending, that's more stimulus, that's more deficits. How do you finance it? Can you raise taxes? Right? So there's a lot of questions to be answered. And
Yeah.
my personal viewpoint is that, I'm in the camp that we will continue kind of slugging along and having less than desired economic growth, and governments
Yeah.
will have to stimulate.
Yeah.
Governments will have to continue on the course of action that they've had right
Yeah.
now.
Yeah. So some chatter, those are good. That's a good summary. I mean, there's been some chatter, I guess, over the last couple of years about as Russia and China continue to add to their gold piles. Do you think that there's any chance potentially in the future that gold is used as a reserve asset again?
It's a great question. I think
Yeah.
it's a much longer term question.
Gotcha.
I can, and of course, nobody ever knows what China does, right? They
Yeah,
release
right.
these numbers once in a while for us.
Yeah.
I
Yeah.
know Russia paused with COVID. They paused their purchases, but
Yeah.
other central banks, we know that again in the second quarter, the data point was that central banks are back. They started buying again as
Yeah.
countries are recovering out of the crisis.
Yeah.
Central bankers are looking to add to their gold reserves for sure.
Yeah. Yeah. Yeah, I mean, Canada made a decision many years ago, I guess 4 or 5 years ago, to stop owning gold in their balance sheet. I think they've reversed that, have they not? I think they've started to add gold back to the balance sheet, have they, or am I wrong?
I don't know actually. I'd have
Okay,
to check
okay,
that.
okay. Yeah, interesting. Um,
But
so
you that's Canada is a whole other can of worms, right? We all live in Canada. And Canada was very aggressive for the stimulus out of COVID, as you know, right?
big time.
We were very aggressive with the shutdowns, but also with the stimulus. And we just actually saw a paper published by the Central Bank of Canada talking about how running higher inflation would benefit the economy by growing it faster, etc. And what does that tell me? Well, again, low interest rates, negative
Yeah,
real rates, right?
yeah,
If you're
yeah,
running inflation hotter. So, but I
yeah.
digress. I digress.
So I guess the last, I guess, question that I'd have, and often there's a lot of I think the biggest thing in macro or the biggest thing in the world is the U.S. dollar, so versus gold. So a lot of people tend to think that one has to go down for the other to go up. Is there any comments that you can add around that? Because I've had lots of conversations where I know historically, sometimes they move together, sometimes they move opposite. I think a general thinking is that they have to move opposite. Any comments you can add on that?
No, I think you got it bang on. I think sometimes they move together, sometimes they move opposite. I think generally speaking, what I will say for gold, yes, it's denominated in the United States dollar, but we measure gold against all currencies because I consider gold a currency in essence, right? It's a physical hard asset.
Mm-hmm.
So to me, I would say we are living in a time of currency wars, right?
Mm-hmm.
Which central bank can devalue faster.
Yeah.
And to me, it doesn't matter because from that perspective, that's why I believe in gold and silver.
Yeah, yeah. So it just triggered my mind when you said that as a currency. I know there's been some companies that have tried to use gold as a bank account balance, so to speak, and transact in like gold money, for example, where you transact in like you use gold as your. Has that caught on much around the world that you've seen, or it's been a no-go in most places?
Yeah, I think it's pretty challenging, but
Yeah,
it's the same thing with Bitcoin. Okay, let's
yeah,
fire
yeah,
back at Bitcoin. The original idea was to do that, and we're not nowhere with that, right?
yeah, yeah. Yeah, fair enough. Fair enough. Are there any questions that you think I should be asking you today that I didn't already ask you? Is there something that I should have asked you?
No, I think we've covered it pretty well. I think, if anything, I would say I get a lot of questions on short-term things,
Yeah,
and
sure.
I want to stress that we don't view this game as it's a marathon, not a sprint. You know,
Hmm.
if you really buy into the fact that governments will continue to run deficit and grow their central banks will continue to grow their balance sheet, et cetera, then you definitely need to own some precious metals in your portfolio. And again, I don't advocate having 50% of your portfolio in it, but a smallish component will be a great diversifier longer term.
Yeah, yeah. That's great. That's awesome. I think you made some excellent points. I really appreciate you taking the time tonight to ask to listen to answer our questions. Scott, was there anything that popped up that as we went through that conversation?
Not really that would add any value. I think you two had a fantastic conversation, and it's just nice that you got somebody that you could dig into the gold conversation with. See that? There's a mining
Nice.
joke right there.
That's
Spent the
good.
last
I like
hour
it.
coming up with that. That's what I did the entire time, trying to come up with a mining joke. All right, well, that's great, Maria. Thanks so much. That was super interesting. You obviously really know your stuff, and thanks for everybody tuning in. Think at heart, and we'll see you next week.
Thanks, guys.
Thanks very
Bye-bye.
much.